Mark Mahaney joins us. Evercore ISI head of internet research covers the stock. Mark, here we go again with Alphabet. Any reason that this one looks particularly different or worrisome for you?
Well, it's a focus on a different part of the business. So in the past, the regulators have gone after, and the DOJ currently is going after the company search business. Google clearly has a very strong position there, but it arguably offers a service that's great for consumers. When you get to the ad tech part of the business, now this is a small part of the business, only about 10 to 15% of their revenue and maybe 5% of the company's profits. That's where there's just a lot of I don't know what the right word is to put here. It's intricacies. So they help publishers sell their ads. They help ad buyers buy ads, and they run the exchange in the middle. Like, there's a lot of potential conflicts in that. So I think that's why the DOJ has been looking at this, and attorneys generals have been looking at this for a long time. I mean, it seems like an obvious place to look. Whether there are real alternatives in the marketplace, that's kind of, it's hard to see what the next big agency is or ad network that could come in there. But anyway, this has been building for a while. It's here. It's going to be an overhang on Google shares. Call it 1 to 2 to 3 points on the PE multiple. That's the drag, and I think you're going to have to expect that for the next couple of years.
So worst case scenario here for Google is what?
My guess is the worst case is that they're forced to spin it off. I don't know that they, I think that's where you had this negotiation last year, and Google offered to sort of spin it off, but not really spin it off. So that's my guess. And by the way, for investors, I don't think that would be necessarily a negative development. Again, it's about 5% of Google's earnings, so maybe even touch a bit less than that. So yeah, that's the take on it. I think that's the worst case for Google. I mean, there may be some fines associated with it, but investors will look through that as they have with prior fines. It would really be a forced spin off of the ad network business.
Mark, who else is at risk? I mean, this is the first real action we've seen from the Biden administration, isn't it, on antitrust, sort of picking up where the Trump administration left off on this front. Where's the next one coming from? What's the big worry that you have? Because you cover all these internet giants.
Well, Sarah, I'm going to go the other way. I'm going to talk about names that I think kind of show that are put in relatively better light because of this. I think Meta is one of those. Meta doesn't have any monopolistic position. If it did, TikTok wouldn't be, having the impact on it that it has. So, and then if you're going to build up a new ad network, I got a couple of companies you should watch out for. I mean, maybe this is Apple's big entry opportunity. I could see them doing something like this. This would be years in the development, but it's possible. And then there's Amazon, which has already built up a pretty large demand-side network, demand-side platform for advertisers. That's almost as big as Google. So if you're going to put pressure on Google, you're creating opportunities for some of these other platforms. So Meta, Amazon, and Apple seem like positive derivatives to me.
Mark Mahaney, thank you for joining us with some of the stock implications of this announcement, this lawsuit today.